stocks and junk that found support and rallied, especially today. I will give a Tesla analysis of the stock. The subscriber asked for it, so if you have any questions or requests, please make a comment below. I'll try to cover it. Euro hit fresh lows against the dollar. Dollar currency index is rallying. Gold could be at resistance as a result. And we will look at crude oil, which is again presenting itself as a short selling opportunity potentially. All this and more in today's edition of MasterChartsTrading.com for Friday, January 3rd, 2025. Happy New Year and welcome to a new beginning. Hopefully you will have a good year, and maybe you had a good year last year as well. So let's continue with our analysis and with our trading. Make sure to hit the like button, subscribe to the channel, share this video. If you're a subscriber, stay tuned. We have a very busy members only video. We're going to cover various ETFs, world ETFs, large cap stocks, speculative securities, as well as gold and silver related. So stay tuned. All of the information is going to be available on my site, Master Charts Trading. You can also sign up for my trading indicators as well as newsletters. If you have any questions, again, ask me in the comments section, or you can ask me on one of my social media sites. S&P 500 is currently, we're looking currently at S&P 500. So notice this, on this chart we have this green, blue, red, and yellow lines. So these are my indicators. They're used for support and resistance trading as well as trend trading. On this chart you can see that S&P 500 has made records back in early December, kind of moved lower towards the green line, found support around mid-December, rallied, again dropped, and yet again came down to this green support resistance line. So we're again finding support around this area, and it looks like we have possibly done. We're possibly done. I mean, there's no way to tell, of course, because there is resistance now at this high from 26th of December, and of course resistance at new records. But by and large, this is a decent looking chart, and obviously it's bullish. There is no change from our long-term bullish posture. Our breakout for S&P 500 occurred back in April of 2023 with a close above the blue support resistance line. So basically this is all I need to make a decision whether or not I want to be buying or selling the security. Right now I want to be doing really nothing. I want to wait until the security comes down towards this blue support resistance line, which is currently around 5,500, which is around 5% from today's price levels. I mentioned that junk debt, high yield bonds. This is a security called JNK, ticker symbol JNK, also have found support around this green support resistance line and has rallied. So junk debt actually is leading stocks higher, which I think is a good sign, because high yield bonds and stocks correlate highly. So we're looking right now at high yield bonds on the weekly chart, longer term chart basically of high yield bonds. Down below here we have a correlation coefficient, and as I have shown this chart in the past, correlation coefficient to the S&P 500, correlation to the S&P 500 is very high for high yield bonds. In other words, high yield bonds and stocks are normally doing the same thing and move together. So when I see this high yield bonds are moving higher together with S&P 500, this makes me feel warm and fuzzy. Basically, I want to see confirmation of our bias, and right now we have a bullish bias for S&P 500 and for high yield bonds. So notice very similar pattern. When we see a breakout above the blue line, we just buy it there basically. Okay, so that's general stock market and high yield bonds. Again, no change for the longer term perspective, and we need to think about buying stocks, individual stocks, or if you want to be buying funds like S&P 500 ETF, I would wait until we come down towards the blue line, or just hold. Basically, like I would be holding same position from last November 2023, actually 2023, so actually a year before that. There was no opportunity almost to buy around the blue line. I like to buy around the blue line because the risk is lower than buying up here by the records. Okay, a subscriber asked to analyze Tesla, so here it is. So first of all, Tesla was in an avoid phase back in March of 2024, so last year, 2024. How do I know? It dropped below this yellow support resistance line, and you can find out more about it by going to my website. Basically, if security drops below the yellow line, we avoid it, and we wait until we see a breakout above this blue support resistance line. So if you did just that, you just bought it on close above the blue line, you can see there were at least four opportunities, maybe even more. So for example, one in July 2024, another one in late July, early August of 24 last year, another opportunity in September of last year, and yet another opportunity in October of last year. But so if you did that, you would be in very good shape. So let's just say you bought it in October. The stock went as high as 118%. So it more than doubled from 220 to about 480. Currently it's about 400, so it's still, I would still, hold it. If I was to buy or to look for a buying opportunity, I would be buying around the blue line. So this is where I would be buying. I would be buying at around $350. So it needs to come down towards that level and then kind of bottom out basically. So for example, here is one such similar event, but back then that was the record basically. Well, that was the record right there in July of 2024. It then came down towards the blue line. We buy it there once it kind of goes below it and then comes above it again. So you have opportunity when the stock goes below the blue line and then closes above it. And basically we're looking for the same thing right now. So if the stock comes down towards the blue line, which is currently around 357, and not that far off, by the way, so it's about 13% away from where I would be buying. Currently it's at around $410, and I would be buying at around $350. So this is basically the essence of how we trade at Master Charts Trading. And we're using these indicators, and again, if you need the indicators, just follow the link in the description. Euro came down. This is euro versus US dollar. Euro completely, well, not completely, but pretty strongly came down. Euro is basically at same level as the dollar, about $1 per euro. This downward facing arrows are actual alerts. So if you are a subscriber, then hopefully you are able to get in on the short side. This is a little bit more advanced because Forex is usually a leveraged trade. So you need to be careful with how you apply how you size your positions. You need to make sure that you don't wipe yourself out with the leverage. But let's just say you are, you know what you're doing, and let's say you went ahead and you opened a short position in euro back in October, maybe even November of last year. That is 540 pips gain. So pips are, I don't want to get into it, but you can read up on how to trade forex. But it's a gigantic gain, especially if you're leveraged. So if you got in, huge congratulations. If you didn't get in, then I would wait until there is a bounce. So I would wait until there's a bounce towards the red line, like that, and then consider selling it short again. Does it always work? No, but sometimes it does, huge gains like that. So euro did come down towards the fresh 52-week close. Most likely we will bounce. But again, if we bounce, we may need to think about selling it short again, when or if we get to this red line sometime in the future. By extension, the dollar currency index, this is DXY, dollar currency index, because it is composed of like 50% euro, and then the rest are other currencies like British pound and yen and Swiss franc and some other ones. But the shape of the curve, you can kind of see it's very similar, just opposite. Euro versus US dollar is coming down, dollar currency index is doing the opposite, it's coming up. Back here in September, we saw a kind of like bottoming pattern and then a rally. I labeled this as unexpected strengths for my subscribers. Then we saw a breakout above the blue support resistance line. You can see 3 arrows here. That just means that we're thinking about buying it. And then we see another leg up after this alert. So again, congratulations if you were able to trade this security. This is a very nice gain. And again, we're at fresh 52-week highs. Now, by extension, gold should be feeling strength of a dollar. It's not feeling it as much as I expected it to feel it. The gold did come down a little bit, but it wasn't, like a huge collapse versus, the euro pretty much unraveled completely. So gold, the reason why I say gold didn't really feel it as much as the euro is because gold is traded in US dollars. So if this bottom part of this equation got bigger, it should pull this currency pair, this gold versus US dollar, should pull it lower. It didn't really do it as much, and I kept saying this from previous videos as well, is that sometimes gold and dollar don't necessarily move opposite. They move sometimes together. And so I think we're in the middle of that. We're still in the middle of that period where gold and dollar are sort of doing the same thing. Both gold and dollar are moving higher. However, current situation is that gold has come down, has kind of come up to this green support resistance line. It was actually able to close above it yesterday on Thursday, the 2nd of January. But yet again, I see there's a possibility of resistance. So there's a good chance gold might still come down and possibly retest this trend line. Okay, I again don't normally use trend lines. I usually use my indicator lines, but this line is sort of obvious because we have this low here in November and then another low here in December. So it kind of makes sense. Maybe we're going to see a third retest. Now, if it doesn't hold, then I'm fairly certain we're going to come down towards the blue line, which is around 6% down from today's levels. Let's see what happens. Maybe we won't. Right now it's kind of difficult to predict this the gold market right now because of the high volatility in the forex universe. So for now, I'm looking at it from a perspective of bullish. So gold is definitely in an uptrend. So any opportunity to buy it on any weakness would make sense. And for me to be interested in buying gold, I would be wanting to buy it around the blue line. And here is how it looks like on a longer term chart. And you can see that basically we want to be buying it anytime it touches the blue line. And it would have been very successful in the past 2 years if you were doing just that. Will it continue a bit the same way? You know, eventually the gold will turn around and it will become in a downtrend. So for example, back here in May of 2022, we came down towards the red line and then continued lower. So yes, it will eventually turn around. But for now, we're seeing the same thing. So any weakness should be bought. And weakness in my mind is a touch of the blue line, so around 6% down from today's level. So it's around 2,500 basically. Finally, let's wrap up with oil. So crude oil, yet again, touched this price floor. I call it price floor for lack of a better term. So price floor currently is around $65, somewhere between $64, $67. You can see that in the past, just from September of last year, oil has been in that area for 5 times. Okay, and then recently it managed to rally. Okay, so right now we're again at this red support resistance line, and notice what happened before. We were selling it short there. So you can see opportunities to sell it short. Latest one was in October of last year, which was successful. Not very large move, but it was successful. You could have shorted it around 73 and it went down to about 67. Not a big move, obviously, but it is still a move. So currently we are again right around where I want to be thinking about shorting it. In fact, right this instant we have what's called a setup. So oil is now has now made a high above the red line. What we're waiting for is a close below the red line. So for example, as we had here on 8th of October of last year. So high above the red line, close below the red line. Pretty straightforward. And if we do get that, most likely we will again at least retest this price floor levels around $65. Will it work every time? Once again, no. But right now it does make sense that right now we are still in a downtrend. So we will take the chart at its face value, and the chart is still bearish. So we want to be looking for opportunities to sell it. Now, if or when we get to this blue support resistance line, which is actually also not that far, it's only at around 6.5 to 7% higher, around $79, $80. And if we close above it, then most likely crude oil will continue higher from there. Into like 80s and 90s. Now, what I'm hearing on TV is our new president is saying that they will collapse the prices because we're going to drill for more oil. That is fundamental analysis. I'm looking at technical analysis, and technical analysis doesn't really take into consideration, the amount of production and all that. We're just looking at the chart. So right now we're waiting for either a signal to sell crude oil short or another leg of the rally up towards this blue line. So we're going to be watching price level at around $79 on the upside, and if we close below 73, below 73.60 or so, then potentially we want to be selling it short. Did that make sense? Make a comment and then let me know if that makes sense or if you need more explanation on any of the securities we traded. Head over to MasterChartsTrading.com to click on sign up one of the products. Again, I have trading indicators, so that the indicators are these lines on the chart. They are available for TradingView.com. TradingView.com does not require a paid account. You can get a free TradingView.com account, and then once you sign up there, come back to my site, sign up for the indicators, and I will open the door for you. on TradingView, so you can see the same lines on your chart. I also offer newsletter, so I send out alerts about the various securities that we trade. So for example, this week is going to be quite busy. We have lots of various exchange traded funds, foreign ETFs like Germany and Japan, large cap stocks, as well as speculative securities such as Confluent, DigitalOcean, Warner Brothers, XPeng, etc. Rivian also looks kind of interesting. It was an interesting setup and actually alert recently, as well as gold and silver miners. We also trade those. And of course, the best deal is to get both trading indicators and newsletters. You also get free 7-day trial with all of my plans. The best deal, of course, is to get the yearly plan. You will save up to 17%. Basically, it's 2 free months compared to the monthly subscription. So do go ahead and sign up. Other than that, let me know if you have any questions. Make a comment, share this video. Thank you for watching, and have another great trading week. Bye bye.